Today we'll chat about DeFi, decentralized exchanges, and how to start earning yield on your crypto that you hold in your wallets, especially if you're a beginner when it comes to decentralized finance. And that is why we got Aziz on the show today, co-founder of StellarSwap, a major decentralized exchange built on Moonbeam that has facilitated more than $1.6 billion in trading volume to this day. Aziz also shares his thoughts on the DeFi ecosystem on Polkadot. He provides some valuable criticism, suggestions, but also some bullish new developments coming to Polkadot soon. So let's hear it in the episode. Cool. Thank you for tuning into the Teach Me DeFi podcast again this week. Today we got Aziz on the show, co-founder of StellarSwap. Thank you for joining the show, man.
Thanks for having me, man. Great to be here.
It's a pleasure. It's a pleasure. We already started talking about things like UI, user interfaces, because you went to share your screen and click the leave button, which is right next to it.
Exactly. Yeah. We should improve UI UX also contextually within Polkadot as well. That's true.
Yeah, it's a good starting off point. Well, yeah, I mean, let's chat about the DeFi ecosystem a bit on Polkadot, on Moonbeam. You guys have been part of the eco for such a long time. I'm sure you have incredible insight there, and I think it's a good time to chat about these things. But perhaps before we get into all that, just for viewers that don't know you guys yet, can you give us an overview of StellarSwap and what you're doing on Moonbeam or within the broader Polkadot ecosystem?
Yeah, sure. So since we're basically a DEX, right? Since we're on Moonbeam, we're EVM based, right? And we're what you call a hybrid DEX. What hybrid means is that we have a few AMMs under the hood, the standard AMM, the stable AMM, as well as concentrated liquidity AMM, which is the latest evolution of AMMs in DeFi. And because there's three separate AMMs, all right, and we built our own router to ensure that there's efficient routing across all AMMs. So what this gives is that efficient trading and low slippage trading on StellarSwap, and that allows for capital efficiency for liquidity providers as well. To ensure that they maximize their liquidity yields and allocation, and allows them to have much more optionality in managing their liquidity. So beyond our core business of being a trade venue, we also have a .lst liquidity staking token, or derivative called ST Dot, which is basically a partnership with Lido since they sunsetted, and then we took over ST Dot as basically the EVM LST on Polkadot.
That's super interesting. Can you tell us more about the different AMMs that you mentioned? Can you make that sort of non-technical, explain what that means, having the stable AMM and the traditional one, and the concentrated liquidity, I think you called it. Just give us a high level understanding of these things.
Yeah, sure. So from the start, right, AMMs are called automated market makers, and they're basically one of the novel ways in DeFi into how you can facilitate trading in a way which is decentralized, or pulling your assets in a way which is decentralized, right? And therefore automated market makers were born. When you think of market makers in traditional sense, they're basically a market participant on an exchange like New York Stock Exchange, and they are the one that make the markets where they provide liquidity depth. It's very similar approach to DeFi, in DeFi, because every one of us that provides liquidity is a market maker technically, right? And market making is basically putting two assets in a smart contract, within a DEX, right? And then allowing people to trade on your assets, and you get rewarded because you provided the liquidity. So you get a cut of the trade fees, you get rewards, incentives that the DEX gives you. So on the basic level, that is AMMs, and there are various examples or categories of AMMs, right? The start point is standard AMMs or V2 AMMs or constant product maker market constant product market makers. So essentially, that is the first iteration of an AMM. X, Y equals K, basically in a curve. And the easiest way to simplify that, right, standard AMM is through the lens of a liquidity provider. So if you provide $100 of liquidity in .USDT pool, right, that $100 will be distributed across across a straight line, right, across from zero to infinity. So your $100 of liquidity is distributed evenly. So this ensures that there will always be $100 worth of distributed liquidity all the way, right? But the issue with that is that it is inefficient, right? And therefore, concentrated liquidity AMM was sort of like conceptualized. Why? Because of the inefficiency of standard AMMs. So concentrated liquidity AMM gives you, as a liquidity staker, the option to choose your range, whether you want to be conservative or concentrated, and what's in it for you, right? Well, if you provide more concentrated liquidity, you get more rewarded, right? But your risk of impermanent loss or your risk of the market price going beyond your range is much higher. And if market prices go beyond your range, you are called out of range and you don't earn anything, right? So that is something that you have to balance. But for the first time, liquidity providers are given the option to choose their range, which doesn't exist in standard AMMs. And when you do that, what you see is that there's a bell curve of the market price. So most of the liquidity is around the market price. And this is what you exactly see in centralized exchanges. When you look at the order book, you see most of the liquidity depth is around market prices, which means concentrated liquidity AMM has the same effects and liquidity depths of a centralized exchange liquidity depth. So that's why it's much more, we call concentrated liquidity AMM much more efficient than standard AMM. So that's concentrated liquidity AMM. And the last AMM is basically stable AMM, pioneered by Curve. So basically, stable AMM is specifically for assets that are correlated, like mostly stable coins, USDC, USDT, DAI, stables, right? Which doesn't have that volatility or sort of like which are very correlated to each other at $1, right? And for specific use cases, right? So that is for correlated assets like ETH, various what you call it, iterations of ETH, STETH and ETH pool, all these correlated assets. So yeah, different assets as the stable assets are for correlated assets, but we put it all together, all these different AMMs together with because each AMM is siloed, right? It's their own AMM, right? Different parameters, different foundations. With our trade router, what we do is that we connect each AMM so that it will find, if a user wants DOT, right? And it will find the most efficient way across all AMMs to look at all liquidity and to find, okay, if we give you DOT, this is the lowest price that you pay for DOT. So basically, that's how we work here.
Oh, okay, interesting. So you kind of give like more optionality to users and also kind of make sure that you then, based on these different engines or whatever, but different AMMs, you can choose the one that for the specific trade that someone's trying to make is the best price, for example.
Exactly. And the best part is that users don't, if you're a trader, you don't care about, okay, where is my trades going through which AMMs, right? Because all you need to care about is, I want the best price. Best price means the most effective, price with the lowest price impact possible, the lowest trade fee possible. So that's what you want, right? And then everything is abstracted on the back end. You don't have to know how a trade router works. You don't have to know this dot comes from which AMM. Everything is abstracted. So that's the That's basically the user journey that is very important. Abstraction is very important in DeFi, right? It's not
Mm.
it's not the more you know or the more you let people know, because in that case it will be called, as in users, there will be paralysis by analysis, right? There's so much,
Mm-hmm.
but it's just abstracting everything so that all they have to care about is what they need to care about.
Mm. Okay, yeah. Can you just explain to me again, like, why is concentrated liquidity a good thing? How does it help the market participants?
Got it. Excellent question. So we've established the fact that concentrated liquidity mimics the bell curve of centralized exchange order books, which means it's much more efficient. Now, what do we mean by efficiency? Or what does capital efficiency mean? So this is very relevant. For the traders, it means lower slippage, right? Because for a given
Mm.
set of liquidity, say $1 million of liquidity in a standard AMM versus $1 million of liquidity in a concentrated AMM, you know, you if you make the same trade, $1,000 in each of those AMM with the same TVL, right? You would find that you get a better price at the concentrated liquidity. So the
Mm.
price impact that you pay is much, much lower as a trader. Now, how does it impact a liquidity provider? A liquidity provider, uh, if you provide liquidity into the pool, into both pools, right? Assume both pools,
Hmm?
right? You would find that you will earn more in a concentrated liquidity pool. Why? Because it has been shown and proven, and even if you look at our analytics, right? Concentrated liquidity pools have higher utilization rates. Higher utilization rate means that your liquidity is used much more, is utilized
Mm.
much more. And because high utilization rate means that your liquidity is just much more, means that it is traded much more. Therefore,
Mm.
you get a higher cut of the trade revenue, right? So
Mm.
as a liquidity provider, because of the higher utilization rate, it means higher APRs from trade
Mm-hmm.
fees, right? So as a liquidity provider, basically at the end of the day, you're earning more. And I think one part of the stakeholder that is absent from this conversation, which is very important beyond traders and beyond liquidity providers, is the ecosystem, right? Because
Mm.
at the end of the day, ecosystems need baseline liquidity, right? Any ecosystem requires that, or if there's no liquidity, there's no market activity, there's very little
Mm.
volume. As in, builders won't want to build because they can't attract anyone, right? Because there's lesser, as in users. So for at an ecosystem level, having deeper liquidity, right, is a vital part of the ecosystem, and
Mm.
concentrated liquidity helps the ecosystem at a much wider scale, because $1 million of TVL goes a longer way on a concentrated liquidity MM as compared to a standard AMM. So
Mm.
from our analysis, it has been shown that $1 million of TVL on standard AMM um, is sorry, $1 million in concentrated liquidity TVL is akin to 9 million or even 20 million of TVL on a standard AMM. So
Okay.
we so you it has the same effect. $1 million in concentrated liquidity TVL has the same slippage or price impact as a standard AMM DEX with a TVL of 20 million. Right?
Mm.
This means that you need to incentivize the concentrated liquidity AMM much lesser, right?
Mm. Yeah.
And to achieve the same slippage, which means that if we have grants like we do, right? The grants, every dollar of grants would go much further in a
Mm.
concentrated liquidity AMM. So that impacts ecosystem, especially when you talk about grants, incentives, those kind of stuff.
Yeah, yeah, yeah. That is really interesting. I had no idea. Glad that we're chatting now and you're framing it this way. So, yeah, because obviously in the concentrated liquidity case, if it's more efficient, you only have to reward 1 million in liquidity, like pay out fees to 1 million in TVL, as opposed to the other case where you have 10 million in TVL that has to get a yield for providing it
Yeah,
the
it's very
liquidity.
expensive. It's we've been in the game for so long, and it's very expensive to incentivize people to come into your platform, right? So
Yeah.
every dollar counts.
Yeah, yeah, yeah. I'm happy to chat about that as well in a bit. Um, Before we do that, so when if I provide liquidity in your concentrated liquidity pool, um, and the price moves beyond the range that I set, I wouldn't earn any fees anymore, right? So does that mean I
Yes.
should be then actively monitoring this position of mine more so than if I would do the other thing?
Exactly. So that's a trade-off, as in life, right? The trade-off of you earning higher returns, your capital is more efficient, is that you need to do more work, right,
Hmm.
to manage your positions if it goes out of range. Now, um, so that's basically the trade-off, and our job as a protocol is to make your life easier in managing that trade-off, right? And how do
Hmm.
we do that? I mean, directly, what we're working on is basically like a notification system, right? So in
Mm.
TG, if your prices go out of range, there's gonna be a notification on TG. Your positions is out of range. Please put it in range back. Uh, but beyond notification system, uh, what is very important is partnering with protocols that specialize in active management. You know,
Hmm.
like Gamma is already live with us. But I mean, just an alpha, Beefy is also coming to Polkadot, right? And they're going to help us with automated vaults, right? So
Mm.
with automated vaults, all you have to do is provide your assets through
Mm.
this what we call active liquidity managers, Gamma and Beefy, and what they do is that they will automate your liquidity position. So your positions will move with the market. So you don't have to worry about being out of range. Or it's basically a passive strategy. So, and that
Mm.
is a very important thing. I think it relates to ease of integration with other protocols, composability, right? So
Mm.
having, because if not, we have to build it ourselves, right? Which obviously, I mean, we don't have the time to do that. It's not our core competency, right? And
Yeah.
therefore, having protocols, big protocols like that, already have millions of user bases, more exposure, as well as they can just plug and play, gives us a good way for our users to tap on a very much needed feature, which is called
Yeah.
automated vaults for them to manage their uh, concentrated liquidity or V3 positions.
Right, right. That makes sense. Also, the integration part. Um, just talking about this, I'm wondering, there's do you have like different participants on your platform? Obviously, liquidity providers, then the people who just want to make a swap, then maybe more professional traders, but also, yeah, you got like maybe on the liquidity provision side, more professional, players who are picking the concentrated liquidity and they're actively monitoring and stuff and are more educated on this stuff. But you also might have beginners. How do you kind of reconcile all these different levels of understanding and things that they're seeking in your platform with like your user interface? How can you provide all this intricacy but at the same time keep things simple for the people who want things simple? Do you know what I mean?
Yeah, exactly, exactly. I mean, knowing your users, and this applies to any protocol, is the most important part in when you're building out something, right? And if you were to classify our users, you can see there's tiers. There's beginners, there's advanced, there's medium. So usually in the case of advanced, usually we can call them those that are very familiar with V3, with trading, with bots especially, right? And usually, for example, with those arbitragers, those professional guys that have their own software, what they do is that they avoid the UI. They go directly into the smart contracts, and
Ah,
for us to facilitate that bot integration is via our docs, right? So giving them good quality documentation so that they can set up their bots, right? Because we know that
mm,
they don't interact with the UI. So then it begs the question: okay, in the UI, what do we show? So even then, there would be classes there would be different user journeys, right? So if that's why if you look at our if you select any pools, right, you can see that
Mm,
you can choose a preset range, conservative, medium, and
mm,
narrow, right? So you
yeah.
can just click and then you don't have to worry, right? But there's also a custom way, because when you click any of the preset, the chart will automatically move, right? But
All right.
you can also play around with the chart to customize your range, right?
Yeah, yeah.
Whether it be you have your own specific strategies or numbers in mind, and you can play around with that. So that allows people who wants to set their own custom range to play around with the chart and numbers for them to set their range. So even within the UI, you would have the preset ranges as well as the ability to move around the charts to provide your liquidity. So those are the
Mm,
kind of things that we sort of like have inbuilt into the system. So when automated vaults become live on our UI powered by Beefy and Gamma, so
mm-hmm.
what's going to happen is that on the UI, straight away you can choose, do you want to manage your own or automated vaults, right? They can, if they
Mm,
choose automated vaults, it's just click, 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 done, and then you're good to go. So that's the user journey that we want to sort of like manifest, right? To
mm.
address those that wants their own stuff, automate or manual, or choose their own ranges or custom.
Right. Actually, do you want to show us some of this on the UI
Yeah,
then
sure.
maybe? Yeah.
Yeah. All right. So when you go to our pool page, so basically this is the place where you look at the existing pools right now. And
Mm-hmm.
apologies for the delay in this. My internet connection isn't really that good. So yeah, you can see, right. If you want to deposit into, for example, our dot glimmer pool, which is one of our, so you can see that there's a manual and auto, right?
Mm,
For example, in manual, as I said earlier, there's preset ranges. And what's cool is that you can do full range, like V2, like standard EMM, right?
mm-hmm.
And then there's a underlying APR figures there for you to make your decisions better, right?
Mm,
And then we put a sign here to show like this is the standard sign, right? And look,
mm,
whenever I go above a preset, you you can see that the we give you the risk profile as well as the profit or APR profile, so that the risk and profit relationship very clearly, right? So,
mm,
and then if you're an expert, you can play around with the ranges. You want ultra sort of like um, ultra ultra narrow. You can play around, right, with the
mm.
charts here. So this is, and then you just state your deposit amounts here, and boom, you're good to go. Now, remember when I said when you have the option for auto, so
Yeah.
you can choose. So right now, Gamma only offers narrow, right? So
Mm-hmm.
you can provide narrow range, which is preset, and then which is only one preset range, and then we can go. So this is basically built, and on the back end is basically powered by Gamma itself. So it makes life much easier. So basically, this is how you can look at how liquidity is distributed and how you could provide the liquidity.
Mm, sweet. Yeah, that is really useful. I had used this before, but I think you upgraded the UI again, and it's more explanatory now. Yeah.
Yeah, it is. And we were constantly sort of like enhancing, so that we could capture. I mean, the first iteration of this was so much information because we thought, hey, you know
Yeah.
what? Let us give much more stuff, right? So people can understand. But, as we sort of like understood from our users, some things can be confusing. We scaled back stuff so that
Yeah.
it's more streamlined or more, yeah, soft.
That's great. Yeah. Speaking of that, like I assume there's loads of users or loads of hodlers, people holding crypto who have it just sit idle in their wallet, aren't like generating any yield with it, returns with it, perhaps aren't even staking it. Just what would you recommend to beginners? Like would you recommend to them? Obviously, you're biased, like to use Stellar Swap, or like how to get started in general, and why should they? Like, why should they be using DeFi? Should they even? Maybe it's not for everyone. And but if they should, in some ways, in your mind, learn about this stuff, like what would be the best way?
All right, so a good question, right? One of the things, one of the main things that, because usually when we talk about first timers, right, they are very anxious and nervous about being in DeFi. It's a completely new space for them, all right?
Mm,
And, when you talk about cryptos, you always think about high volatility, right? And stablecoins is a good way to break that stereotype or that narrative. To
mm,
say, hey, you know what? You can actually earn good returns on your stable coins much better than you would in traditional finance.
mm,
All right. And therefore, you could deploy your stable coins, which are stable in value, and generate like market beating returns. By market beating, I mean relative to traditional finance, right?
mm,
So you can stake your USDT. I mean, you can convert your fiat into stable coins and stake and earn 23%, 18% per year, which is massive, right? And then you can get a feel of the entire process. Now, obviously, as we said, users, there's various categories of users. If you want to go further than that, right? If you've read about DOT, right, and you think, hey, you know what? I think I want to get some DOT, and if I stake it in my wallet, okay, it's fine. You can earn. You can earn from price appreciation. Dot going from $7 to $8, right? That's price
mm,
appreciation. But actually, one of the beauties of DeFi and proof of stake blockchains is that you can actually stake for example, your tokens and earn rewards on top of it, right? In a
mm,
secure way, right? So what you can do with your DOT, if you fully bought in the idea of DOT, and then you say this is going to be the future. I'm going to invest in DOT, but I can actually earn a passive return on DOT by staking my DOT into an LST. And this could be in
mm,
ST DOT, our own. It could be in Bifrost's V DOT. It could be in Akela's L DOT, But it's a good way for you to make your DOT work for you, right? Rather than sitting
mm,
in the wallet and expecting price appreciation, but you're earning more DOT when you put it to work. And more importantly, maybe not for users, right? The more DOT stake, the more we are contributing to securing the ecosystem, right? So
mm,
that's a win-win-win for everyone involved. So those
mm.
are the
That's
two
true.
main things for new users that will not get impermanent loss at the start. Will not get how do you want to do farming or staking. It's
Yeah,
simple stablecoin staking as well as dot staking, for example.
right. Oh, that's great advice. And if you look at the stablecoin staking, you mentioned like the yields, 18% or 30. Um, just to double click on the yields. So, for example, in what token is the yield paid out? And just want to make sure if there's other risks. For example, let's say it's paid out in some volatile token and that token
Yes.
devalues. And then so you don't really have the 8% yield in fiat, right? So you could maybe even, um, well, you could have, yeah, just a much lower yield in that case, for example.
Yeah, that's true.
Um, yeah, please
Yeah,
go ahead.
exactly. So usually the reward tokens are volatile tokens, are not in stable coins. So a good way would be to sort of like frequently sort of like manage your positions, manage your incentives and rewards, whether it be like selling your rewards to actualize the returns in putting them back in stable coins, or using auto compounders like Beefy. What
Mm,
they do is that um, you earn in volatile tokens. What they will do is that every single day they would break it down into your underlying stable coins
mm,
and restake for you. So if you stake $100 today, tomorrow your capital positions would be $101, for example,
Mm.
right? And the next day 100. So it adds on to your capital positions, by reinvesting your rewards.
Right. And with the dot liquid staking, uh, you're getting more rewards than the native staking reward of the protocol of Polkadot, right? But that delta as well. Where does that delta then come from?
So basically, when we talk about LSTs, right, like ST for example, the staking APR is from the uh, Polkadot blockchain itself when they give out the rewards. So this is basically the rewards, the yields generated, basically inflation from the Polkadot blockchain. So when you look at the
Mm.
staking APR over here, it's basically directly from the POS blockchain, which is in this case Polkadot itself. The
Mm.
reward that is given to stakers for securing the network. Now, what is cool about DeFi is that once if you want to explore, okay, you know what? I've been earning good returns so far. How can I supercharge my yields? And this is the beauty about like composability in DeFi, right? Is supercharging your yields because of greater optionality. So what you can do is that you have ST dot, you're earning like 18%, and you go to our farm and you stake ST dot with dot,
Mm.
right? And then you can earn a further 11%, right? So this is a
Mm.
way for you to sort of, and it's not a volatile farm because it's ST dot and dot, both are correlated as well, right? So
Mm.
you don't really have to face like volatility because they are correlated assets. But at the same time, you put your ST dot to work and you earn an additional 11% on top of what you've earned, 18%.
Mm. Gotcha. Okay. No, that's really interesting. Hey there, just a quick message. If you're watching this and you're enjoying it, please make sure to tell a friend that might also like it, because we don't run any ads on this podcast and that helps us out a lot to keep doing this. Thank you. I feel like you already shared a bit about how you guys differentiate yourselves perhaps from other decentralized exchanges with the different automated market makers and things like that. But
Yeah.
is there anything else you'd want to say on that? Because there's so many DEXs in the blockchain space overall, but perhaps there's a few different ones as well, and Polkadot and all that. So yeah, how do you think about kind of like being unique and attracting users and liquidity?
A great question. Now, DEX is obviously the main core business would be facilitating trading of assets, right? And therefore, the particular AMMs is extremely important because the AMMs, the design of the AMMs are the ones that is going to dictate how basically the whole structure of the DEX, right? And I've covered that we are hybrid DEXs with various AMMs under the hood, but how we try to sort of like differentiate, right, is to, especially within the Polkadot ecosystem where, if DEXs are based on non-EVM chains on Moonbeam, substrate, right, it is much harder for them to integrate all of the tools or even integrate with other protocols to make life much easier
Mm,
for the users. They would have to actually build out themselves, right?
mm,
Or wait in the future for someone to build it out, right? So you can see what for us in our case, all we have to do is just call up Beefy, hey guys, please integrate. We recently integrated with a centralized exchange on Ramseed, right? Where users can they can link up their centralized exchange account like Binance, Coinbase into their decentralized wallet, so they can just click anytime they want to withdraw from their centralized exchanges, one click, and then go to their EVM wallet on StellarSwap on Moonbeam, right?
mm,
So that is within a week, there's $800,000 of capital inflows into the ecosystem, right, with our
mm,
campaign. So this kind of stuff, right? If we build out our own centralized exchange off ramp, it may take us 6 months, right, and
mm,
resources and cost, but it's
yeah.
much easier for us to go attract service providers, to make life easier for users, and we don't have to care about creating the infra for that because it's already done by specialist service providers.
Yeah, yeah. You're really tapping into network effects just being part of this
Yes.
network. I would love to talk about that. This is on the agenda for today, and I think this is a good moment. Um, Perhaps before we go into things I wanted to talk about with regards to Moonbeam and that sort of onboarding standpoint, like Polkadot ecosystem. Perhaps if you compare it, the DeFi ecosystem on Polkadot, if you compare it to other other major blockchains, right? There's still a lot of room for improvement, right? And it's a topic that is discussed. So in your view, obviously you're an active project in that area, one of the big ones that are doing well in that area on Polkadot. What would you say the Polkadot ecosystem kind of needs to build a more thriving DeFi ecosystem? If there was even like a step by step or whatever, or the things that you would like to see, what would it be?
I think greater degrees of abstraction. Right now, I mean, beyond the uncontrollables like institutional on-ramping, institutional partners, or even centralized exchange, um, opening up to directly to Moonbeam or Polkadot, those those are obviously very important because they provide the way for the large institutional funds to come here in a way which is simple, which is direct, right? Those obviously needs to be settled, which I think has been in the works for a couple of years now. But beyond that, I think, I mean, we see, I mean, a high level of abstraction is much needed right now. We can previously there was talks about marketing isn't as coordinated, right? But now we're changing that with Distractive on that and various other stakeholders, and as much noise as we can make, right? Which with the upcoming dot incentives as we can. But at the end of the day, you know, it must be simple, right? Because a user cannot, we cannot expect the user, who is used to the simplicity of transferring assets from one EVM chain to another or a centralized exchange to their wallet in a very easy way to come to suddenly to Polkadot by transferring their stablecoins to Asset Hub, right? And from there, XCM it to Moonbeam, and understanding that there's a existential deposit, so all
Yeah.
this, there must be greater levels of abstraction needed, to ensure, like, okay, how can I one click it, what
Yeah.
can I use to simplify the entire process so that it can emulate the simplicity of the other ecosystems.
Yeah. Yeah, it's a lovely point. And are you seeing progress on that front, or would you like to see different things?
I think right now with the greater decentralization aspects of Polkadot, where teams are right now, like velocity branch, as in branching out, Braille, X UX guys from Parity. Now there's
Mm.
greater sharpened focus, for them to sort of like work more together at the grassroots level and to create the tooling environment for abstraction to happen. Right, and this is I mean, this is very good, right? Because I'm constantly in touch with those guys to see, okay, you know what, how do we elevate the user experience? How can we engage in
Mm.
more abstraction, right? So that is the things that I think we've seen very good progress, and
Mm.
constant synergies with teams like that to really streamline the process.
Okay, that's good to hear. Um, on that topic, we tweeted something earlier this week, which got some engagement, which was basically asking the question if we are not using Moonbeam. For the people who don't know, Moonbeam is a parachain on Polkadot, so connected to all these other blockchains that are interconnected through Polkadot. Um, so we just asked the questions if we are not using Moonbeam enough as an onboarding point kind of for users and liquidity into the broader Polkadot ecosystem. You mentioned all these benefits. It's EVM, same virtual machine as Ethereum. It's familiar for users, but at the same time, it's easier to deploy for projects who have already built their EVM project on Ethereum or somewhere else. And you get this network effect going more quickly, and perhaps this can all spread out into the rest of the ecosystem and into the application specific other parachains or whatever. So there was this overview posted by Axelar, which is a popular cross-chain messaging protocol, just showing the liquidity flows between all the different blockchains that Axelar is connecting. And from the Polkadot ecosystem, it was only Moonbeam that you could see in that overview. And yeah, I mean, it could be argued that an opportunity is being missed here to use Moonbeam as a more like kind of canonical, publicly pushed onboarding point by Polkadot, because that is what's working. I don't know about Asset Hub. You don't see much activity on there, I think. And you mentioned some negative points about that. So like, why not double down on what's working? I understand there's downsides to that, maybe like picking favoritism in terms of which parachain to support or whatever. But I mean, there's value in doubling down on what's working for the whole ecosystem. So what do you think about all that as a decentralized exchange on Moonbeam?
So two things to preface at the start, right? Number one is that we're based in Moonbeam, and therefore there could be an element of bias. And number two is that I think based on cumulative feedback, right, we can see that the transaction, the activity volume is mostly on Moonbeam, right? And presumably so because it's EVM. People are used to the familiarity and the environment of EVM, and that's why it's much easier to onboard people on with their MetaMask on Moonbeam, right? And there has been countless debates, discussions, I think behind closed doors as well, as to points like you raised earlier, right? And for us, I think on our end, I think it's much. It would be much easier to onboard first time users into Moonbeam, because Moonbeam also has Moonbeam routed liquidity, which other parachains are using, right? That piece of infrastructure would allow capital inflows from Moonbeam to spread around the Polkadot ecosystem parachains, right? And that makes it much easier, right? And the only thing would be the initial burst of capital flow from centralized exchanges or from external sources, right, to Polkadot, right? Because as I've stated earlier, it's very cumbersome, right, dealing with Asset Hub and expecting people to know a lot of various parameters and interacting with Polkadot. I mean, in fact, even it happened to us, right, when we were submitting the Polkadot treasury proposal. We had to set things up, all right, dealing with the multisig. When we are used to dealing with multisig, with Gnosis, which EVM, right, super simple, right? Then when we were dealing with the Polkadot multisig, we were like, what the hell? This is crazy. This is really crazy. And we, as in, to us, it's like we were actually quite dumbfounded into the complexity of this, right? And let alone someone new, a new builder, for example, right? So things like this, as I said, abstraction, right? There must be greater levels of abstraction needed to put us at a point of familiarity that is much easier. And I'm not saying that, hey, you know what, EVM is the best way because it's familiar. It could be as simple as really streamlining the UI UX, all right? Because that is all that matters, right? The least clicks possible, the less extensions of wallets possible, right? So yeah, it's all about simplifying the user experience, and currently Moonbeam is the sort of like is the easiest point, and we've sort of like proven that already with transactions, with the volume, daily volumes happening on us at a much uh, higher than any other DEX. Easier for people to bridge into using our cross-chain swaps powered by Squid and Xla. Our SEX on ramp by C. So those are basically data points which are very valuable for us to understand. Hey, you know what? It's much easier to uh, transfer your assets via on Moonbeam.
Right. Yeah. Thank you for sharing that. So you're doing your own kind of things as well to make onboarding easier for you guys. Obviously, you're dependent of the whole ecosystem, but you're doing the on ramping, the centralized exchange on ramping. This thing with Squid, who we had on the show a few weeks ago, the cross chain swaps to bring in liquidity. That's really nice. And yeah, can you just share a bit about kind of like what metrics, what milestones you've hit, and then also what we can maybe expect from Stellar Swap in the future. Features, launches, partnerships, whatever. Just so viewers know what's up.
Yeah, I mean, very excited. We're very excited, and we're very thankful to the community for pushing us over the line with regards to our dot incentives for us to ignite Polkadot, right? Much needed, way overdue. I think it's the right time. Before we go live, what we need to do is to ensure that we have uh, all the stakeholders that has already planned for us to make life easier for users, to make capital inflows much easier. We're already working with the stakeholders onto the finishing line. And then once everyone is done, we will make it live. I think we're proud to be the only DEX on Polkadot that has surpassed $1 billion in cumulative trade volume. We're now at 1.6. We have the highest
Mm.
daily volume daily across all DEXs. 14,000 users that are using us, and with the dot incentive grants, right? As well as we've reached out to each and every parachain to say, hey, dot grants is gonna incentivize your assets. Why not you put your own incentives as well, so we can have much more
Mm.
rewards, right? And more hype. Suddenly, from a dual incentive, it's triple incentive, and then
Mm.
a coordinated marketing plan with Distractive, with Evox, with Lunar, to get all the marketing components together as well to hype up this entire campaign, so that we could actually hit the target of getting $60 million in TVL. And as I said earlier, right, in concentrated liquidity terms, that 60 million could easily be a 600 million worth of liquidity debt, which is going to
Right.
really power baseline liquidity for the entire system. So that's what we focus on to create to create the base foundations right now for all the stakeholders to integrate. And then once everyone is live and capital can seep into the ecosystem much more easier, then we will just ramp it up, incentives, and then ignite the entire ecosystem.
That's great. Yeah, thank you. That's been awesome. Thank you for sharing all your thoughts as well on the ecosystem. And I think these are some valuable points. I think abstraction was also a theme that always popped up during the things you said today, which is a good takeaway. And I think also from for beginners that are watching, what you mentioned, how to start out with DeFi, perhaps with a stable coin staking, or staking dot, or doing liquid staking with dot. I think that will be really helpful to get like a more tangible, practical way of starting using Dexes and Stellar Swap. Yeah, I mean, thank you so much. Is there anything else you'd like to share before we wrap this up?
No, I think what we're really excited about Polkadot is I think the recent announcement of Gavin's vision on Jam. That's gonna be groundbreaking, because I mean, I think we've cracked the holy trinity of like blockchain decentralization, security, and scalability, right? So that is something very, very, very important in the progression and evolution of blockchain. And that is why everyone should take notice of Polkadot and know that this is going to be Polkadot's blockchain is going to be basically the de facto sort of like the blockchain which everyone should and already has taken reference from. And yeah, we're really excited to open up that gateway, for people to come into the ecosystem, explore it, explore any other parachains and native assets in our ecosystem, so that they can feel the power and the potential of the Polkadot blockchain.
That's great. So you have high hopes for Core Jam and the technical upgrades that Gavin Wood, founder of Polkadot, presented.
That is just mind blowing. Exactly.
Sweet. I think that'll take another hour to go down that route with you. So perhaps another time. Also, I haven't wrapped my head fully around that because it's so technical. Hopefully, we'll find ways to communicate these amazing upgrades with the normies as well. Would be cool to kind of get these points across because it is exciting stuff that is being built.
Exactly.
Sweet. Thank you, Aziz. You're welcome on the show anytime. Thanks for coming on.
Pleasure's mine. Thanks for having me.